All right, good morning traders and welcome to the Bookmap live trading webinar today with Scott Pulcini. We'll go through some live trades using Bookmap. The whole goal here is to meet your criteria for a need of order flow education. We have an educational course, we have the live analysis so you can apply that education, and then we have live trading. So that should kind of fit the bill, and you guys can learn from the education and then from other traders. So let's, you guys know who Scott is. Really interesting background and history, trading back in 2002 to 2005, 10% of the S&P E-mini volume, taking positions that we probably don't even take within a few minutes. He's probably taking positions we haven't taken within years. So anyway, very large trader, and we're lucky to have him here. So I have content. I'm sorry, contact information. He does offer education and mentorship. You can reach out to Scott here. I'll be putting this into the chat. It's got an educational course, a trading room, website, etc. So you can click right on the links. You don't have to copy them down. Let's go through the disclosures and then we'll get started. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So just to note that this is it's live trading for education. It's not trade recommendations, so that you can apply what you've learned in the live environment and see and look over the shoulder of a professional trader. All right, so let's get started here. Scott, are you there? I believe so.
All right, you got me?
Hey, there you are. Okay. So
what's going on? All right, let me share my screen here. All right, you got my screen?
Yep, we're all set.
Okay. All right, so we just had a pretty big spike here in these equities, including NASDAQ, and a setup just came in, so we'll go over zone drawing, which for some reason a lot of people are having trouble with, even in my room, even though I do it every day, twice a day. So we'll just keep going over it. But you can see here, this is actually the first setup of the morning in any of these equity products. You can see these 366 buy icebergs right here. And you had some swipes. So this is a good example of so Global Plus, which I recommend over just the basic Bookmap product, has these sweep indicator and they have absorption indicator. But anyway, this is a good example of someone came in and swept this order book for you can see the buy bubbles, the blue bubbles, but then you see the sweep, meaning someone just swept all these prices for 329 contracts. So that's good information to know, and it wasn't a stop run, right? So what I always say is, it's not what I say, it's what is factual, that all stop runs are sweeps, but not all sweeps are stop runs, right? So this was a sweep. Someone swept the order book and it was not a stop run. So it's just good information to know, because you could just imagine, anytime you're trying to understand what's going on in the market, pretend you're the big trader in here and you're the one getting run over, right? So say you have in this section right here, you had all your working orders and someone just came, you had 300 working orders and you just kind of screwing around with the market. You didn't really want to get filled on all 300, and someone comes in and just swipes everything from you, which happens all the time. Trust me, like guys that even in trading firms that have the size to trade, they'll try to spoof, even though it's, I'm doing air quotes, illegal to be spoofing, and it happens all day long anyway. But the point is, they'll put in orders in here trying to scare the market back down, and they're not expecting someone to come in and sweep all their orders. So just imagine you are this trader that had these resting offers in here that just got 300 of them swept from you. I'm not saying this is one person that swept it, or one entity that swept it, but you don't know what was on the other side. I'm just giving you an example of, pretend you are this person that gets your order sweep and the market does this. You're like, oh crap, this is not what I thought was going to happen. And then you're praying for it to come back to your areas so you can peel out of the trade. So it's just really good information to have on top of the SI indicator, which is obviously my driver, the driver of my trading, and should be. You can see this is the same pattern that goes. I didn't even watch what happened after this when I was just explaining this. But this, pretend you are the trader that got run over here. Now you're like holding your breath as it comes back in here. You're like, oh, thank God, let me get out of this, and you peel out of your shorts that you just got swept on, right? So that is what's happening in these markets, whether it be icebergs, sweeps, so on and so forth. So if you can view markets in this simplistic manner, you can have a better idea of what's going on. So it's just a quick explanation of the sweeps. But anyway, we want to draw this. This is my main driver, obviously, is the SI indicators. So when you draw these zones, again, we go over this every webinar. First of all, you want to get this last traded price on your chart. Again, when I first started trading, I took it off because it was just too much for I don't like too many things on my chart. There's enough on these Bookmap charts as it is, but to draw zones, it's crucial, right? So just right click on the dot, configure visible components, and then pick last price, and that will give you this level. And then when you're drawing your zones, just take the bubbles off and draw. You just want to take the spike on the SI indicator, and you want to incorporate all the prices that happen in this spike, right? So that basically this buy ice started down here. This was 100 of them. So let's see. This was a continuation, and this looks like this was one house. You can see on the SI, the on chart. So I'll include this as well, right? So you can see when this spike started, this was the price it started at. So we go, actually I got my hotkeys working, so you can set up your hotkeys. I can show that a little bit instead, how to do that. So it started there, and you can see the spike started coming in here. It wasn't quite threshold, but it continued, and this was one house, as you can see by that line, this white line. So I'll continue, I'll incorporate all of these prices that happened since the spike. So then we spiked, this was definitely threshold, so that got up to here. So I'm just going to draw that. I may have to change it. So now I want all the prices. So you can see this is still a little too low. You see the prices in right here. The spike still was coming in, so I have to incorporate these prices, right? So I hit, click on this, pull this dot up, and that looks like an accurate. Actually, that's still not right? So you see the spike to here. So you just, if you want to be accurate, you got to make sure you zoom in on these charts and get all the prices that happen in this spike. So hopefully that's right. No, sure not. So this came in as well. This is the way it is. Sometimes you gotta, as you go further right in your chart, you're gonna be like, oh wait, I didn't get all the prices. You just gotta adjust this. So that looks like the accurate zone, right? So let's color this for buy ice, because I like to know, what type of iceberg it is, whether it's a buy or sell and or stop runs. So that is that zone, and that incorporates this swipe as well that was in there. So not only did you have buy ice, which are hidden orders, right? Icebergs are hidden orders. They only have to show a portion of their order, and then they have however many behind it, right? So I think it's 10% of their order, right? So in the order book, all they have to show is a 30 lot, and then someone comes in and starts hitting it, and then they run into 300 behind it, right? So or 270 behind it. So you had the buy ice hidden orders that the sellers ran into. Then someone came in and swiped the order book on top of that. So that's all technically bullish, right? For what should, how the market, it's all about how the market responds to this area, but the buyers are serious right here, put it that way, right? So whoever was selling this ran into a mouthful of ice, and then whoever had the resting orders in the order book got swept. That is incredible information that you want to know to figure out which way you want to be trading. And you can see this is the typical pattern. So we did retest. I don't know if this was an ATR. We'll figure this out here in a second. So just put these prices in the spreadsheet and then we'll figure this out. I just want to make sure this is accurate. So the top of this zone is 11.6, 475, 0475. So we take a look at here as well. Let's see here. So we have this in my trade room to help know the exact prices to get in and out and add your ATR, which we'll go over all of that as well, but we'll make it very accurate. The bottom of the zone was 11.15 or 11.589.75. So put that in. Current ATR. So I use a 5-minute Wilders ATR. It's just the default setting on Thinkorswim. You can see in the middle there, it's at 24. So the average 5-minute range is 24 points. Very, very, very important. Those of you that trading with a static loss that say, oh, I only like to risk 10 points when I put out a NASDAQ trade, that's nonsensical if you actually think about it. I say it every webinar, the market does not care what you want to lose. The market cares about the current volatility and the volume that's coming in. So please, if you've learned anything from these webinars, stop using static stops in whatever you're trading, ES, NQ. You're just opening yourself up for algo stop outs, because when the volatility, if you got let's see what the ATR is here. And so the ATR is almost 6 points right now. So if you have a normal 2 points where you jump in and trade and you risk 2 points, well, that's just a random number, right? You're not adjusting to the dynamic volatility in the market. So you're just asking to get stopped out in your trades if you're using a static ATR or a static stop loss. So if you learn anything, use the 5-minute ATR to your advantage. All right, so I trade these setups one of two ways. I either trade them aggressively or conservatively. The aggressive entry, if I really love an area and so from my studies, from watching thousands and thousands and thousands of these setups over the last 4 years, I have pretty much seen that the market will retest these zones 70 to 80% of the time, right? So that means 20 to 30% of the time they don't. So I have to make decisions whether I want to enter aggressively when it breaks away from that zone, or I want to wait for a retest failure to prove kind of a confirmation type of trade that the area is valid, it is bullish. We already know what happened down here. That should be bullish. Should is the key word, and it's looking bullish right now, right? So I determine, based on other things we'll talk about today, whether I want to be aggressive. So this trade, first of all, I've been drawing the zone. I didn't really get a chance to be aggressive, so I'm out of luck if this does not come back to the zone. But in this particular circumstance, I would have considered an aggressive entry. This is a multi-day, three and a half day or 3-day balance area, right? So what's a balance area is just two-sided trades where traders are placing bets. Longer term traders, when they are wrong in this, when the market breaks from this area, that causes the pukes, right? So these are times where you want to be aggressive on setups, right? So again, I missed the trade, so it is what it is. I'm just hoping it retests. I will go long, but I could have gone long knowing this is breaking out of here. But this is shorter term. Then you still have to know the bigger picture. What is this bigger picture showing me? Well, this is one monster balance area, and this market actually accepted at the bottom of it and below it for multi-days. So coming into today, my thesis was we were going to do this because it was accepting lower below this balance area. All these longer term traders are holding their breath. If this moves a little lower, you're going to get a huge move lower, right? So my thesis coming into today was down. And it looked like on the open that was going to happen, and it started to move down, and instant rejection. You get a buying tail right back through this entire balance area, and now it's breaking out. So the point is, you could go aggressive, but the bigger picture, this is still not bullish. This will be bullish for longer term trading, like for bigger moves, like large moves, is if this can recover this high volume node of this balance area. High volume node is just where the most trade occurred in a balance area, right? So that would, in my mind, signal a failed breakdown, because this did get below this large structure and it didn't fail. then that would be a fail breakdown, and you can expect a monster move up, right? That a lot has to happen before that happens. So the point is, short term, yeah, this looks bullish. Longer term, it still doesn't look bullish to me until we can get through that, right? But we're day traders. I'm a day trader. I want to trade what is happening. So what's happening now, I should say. So being conservative, waiting for a retest of the zone is still not a bad idea. But I'm just giving you options, because you got to learn, you got to come up with your own playbooks and your own ideas. You incorporate what you learn, in the Bookmap webinars and, from me of how to trade the zones, but you still have to learn and come up with thesis on what's happening today. And we'll go over something that I saw in Crude where I think it's going to get smushed today as well, on something that I expected to happen that didn't happen. So this is a good example too. I expect this to at least probably rally up. I should have a zone drawn here because this is where directional conviction started. We'll do that in a little bit. But I expect this at least to come to this high volume node, to this big balance area. If this right now, after everything we've just seen, right, there's buy ice, the swipes, the buying tail. If this turns around and does this and gets to this high volume node of this little guy, then I'm expecting what I originally expected, and it's going to be pretty dramatic, I would think. Right, so you come up with if then scenarios. Right now, this looks bullish, so I'll play to the bull side, especially. So this is what I'm talking about. You usually get the one or two ATR, 5-minute ATR away from the zone, then it'll retest, and then we're going to see if it fails. I will tell you, the last few days, we have had this setup where it's done this and it's come back, and I wait for the confirmation off. I don't go long right when it comes back, because so many times, and it's happened multiple times the last few days on the trading webinars in my trade room, where it's done this, it's pushed an ATR or more outside of the volume event that has come back and then right through it, right? So that's why, trust me, I would love to get in and not wait for this. So let me just give you an example of what I'm going to do here, right? If this does retest failure. So let's just make sure this ATR is accurate. It's 24.34. So this market, for the one ATR, for one ATR away from the zone was 11,431, a little more than that quarter. So this was a full ATR. So this is how I determine if this setup is bullish or not. If it can push at least an ATR away from the zone, which it did. It actually got outside of that. Right, so here you go. Hopefully my trading room caught this trade, because this is another trade we're working on, a reversion trade. But anyway, this is ATR. Here is your retest. Now, if this fails back out of here, I will enter a long at 110% of a 5-minute ATR, and then I will risk 110% of a 5-minute ATR below this zone. And again, I know what, especially if you're new to my webinars, well, that is so much risk. I don't want to risk it. I like risking my 10 points when I put on a trade. Say it every webinar. This is the science, right? The science is this buy ice and the swipe, if you want to incorporate that and use that in your analysis. But either way, this was bullish, right? You can trade this stuff however you want. The way I trade it, trust me, I learned the hard way of saying, you know what, I'm going to get in right when it comes back to the zone, and then you get smushed a lot of the times, right? The best way to enter this type of trade is to wait the confirmation away from the zone to prove this is bullish, and then also placing the stop far enough away from this volume event where you're not getting algoed. Because when the big money's not playing, then the algos start playing their games again, and they know how traders trade. They know traders get long and then they trail their stop, to either break, so say traders get long right here and the market starts to move away. Well, they know traders are going to trail their stop, and then you get stopped out, and then the market goes exactly where you thought. How many traders watch this 10 times a day? So the point is, I've learned, this is not just me like hypothetically saying stuff. This is from watching thousands of these setups, where I've learned the hard way to not be messing around in these areas. I put my stop away from the volume event, and if this market can push, so if this does this, and this, and I get long, I put my stop below here. If this market can push down through here more than an ATR, then I'm wrong on the trade and I move on to the next one, right? But I will not allow myself to be algoed as best as possible, right? And I just know how these markets trade, and algos are 80 or more percent of the activity in all of these futures markets. So you need to understand that when you're trading when you're trading these products. All right, so let's see if this retested. So I consider a retest if it got within 10% of an ATR from the top of the zone. So the top of the zone was 475. It actually shows you right here. Let's take a look here. I forget what I'm looking for here. Lost my train of thought. So let's just see. Got yeah. So this got within 10% of a 34 ATR. No, 24. Sorry, 24 ATR is 2.5 points. So this get within 2.5 points away. 7/4. Yeah, real close. Basically within a tick. So my point is to go long here, which this is looking like right now. Let me get this in so I don't miss this trade, like I did last week. We missed the winner. So we go to the position trading side of this. Right now, what did I do wrong here? There's something off on this spreadsheet. Hold on. 11,406. Oh, this is why, because I put in the wrong zone prices. 11,605. Sorry, I did a little dyslexic. There we go. So that's accurate. So the top of the zone is 604.75. The bottom of the zone is 89.75. So this is where it doesn't matter what the zone or the AT or how much you have to risk. You base it on risking a certain percentage of your account size, and then it adapts when you put these prices in and understanding the ATR. It shows you how much you can trade, right? So if the ATR was, 15, I can put on more. If it's 50, I can put on less. But this remains constant, right? So it doesn't matter what you have to risk. You're just adjusting your size for how much you want to risk per trade. And the most you should be risking per trade is 1.5 to 2% on an individual trade. And for the day, you shouldn't be losing more than 5 to 6% of your account size. If you do, you should just shut it off for the day and be done. Tomorrow's another day. That day is just not conforming to what you think is happening, so on and so forth. Strategy is not working that day, which happens all the time. You're going to have drawdowns, and you need to be able to not blow out your account when you're not having a good day. And then on the flip side, I don't really want to go on this rant. But when you're doing well, you do not want to get up if you hit your profit goal for the day. That's just, again, it's nonsensical. Everybody that's been trading for any amount of time knows how difficult trading can be, right? The days you are seeing things clearly, you do not want to be getting up if you hit a profit goal. Yes, if you hit your profit goal, say your profit goal is $5,000. If you hit that and you give back 20%, so if you give back $1,000, then you get up. I'm perfectly fine with that. But do not get up if you're seeing things clearly and making money, right? I tell this story all the time. In my trading firm back when I was in King Street trading in the early 2000s, I can't tell you how many guys, and for some reason $5,000 was like the magical number. If they made $5,000, even if it was in the first 5 minutes, they'd shut off their computer, they'd go to the game room for the rest of the day. Hold on, let me get this trade in while I'm ranting. All right, so my entry here is 31 half. And I could put on 2 contracts. I'm going to round down on this one. All right, so we'll go over again what I'm doing here. So 31 half. All right, so what this entry is this is my conservative entry. So if I was aggressive, which I could have been, like I said, it was a break out of the balance area, I would already been long at 31 and a half. The second this got 110% of a 5-minute ATR outside of the top of this zone, I would have been in. I didn't. I was fortunate. It came back. It retested the zone. And now here's my confirmation. And now I will get in this trade the same exact price, which is 110% of the current ATR. And then if I get filled, I put my stop 110% of an ATR below the volume event. And that avoids getting whipsawed that we just talked about. So that will be my entry. Another thing that we watch in my room, this is called Algo Guy. I mean, it's not, that's what I call it. This is a exponential moving average ribbon. The blue ribbon is the shorter term exponential. These are just literally individual moving averages all wrapped up in one, and then these are longer term. So many times, when you trade, you want confluence, meaning. Hold on a second here. Position on that I forgot to delete. Hold on a second. All right, so I'm long this right now, but hold on 1 second. We'll go back and delete some of this stuff. I had positions I was working before I got on here. 1 second. All right. All right. So anyway, so the algo guy is just basically exponential moving averages. The blue is the shorter term, the red is the longer term, and you can catch some. So what I was talking about is confluence. When you're putting on trades, you want to have as much confluence in your favor as possible, and we'll go over some of the other things I look at. The one thing I think I did wrong here, I think I added right before the major red Ludwig level, which is not a very smart play. Hold on, I sure did. So you can see here. So my rules are I usually do not take this trade into a red lug. I may get lucky here, but if this fails, I will not be surprised, right? So this is an exact perfect example of confluence on the bearish side, right? So what do we have here? We have red lug. We'll go into Ludwig levels in a little bit. Right? They're very important to my day trading, and they're very, very powerful, especially with the bookmap setups. You have extreme standard deviation of VWAP. So this is VWAP. This is one standard deviation called daily value area is another term they call it by. Then you have 1.5, 2 standard deviations. You have to know algos love to play reversion in the mean. So if there's not big money coming in, which right now there is not, when I look at relative volume to determine that, we'll look at that in a second. Many times you get these algos that try to snap it back. So you got red lug, you've got extreme standard deviation, and you have the top of this prior market profile composite. This is not a good place to be taking longs. It's actually a good place to be going short. I don't usually take longs here, and I'm just deciding whether I want to get out of this trade. And you can throw in a spot gamma level here as well that can add as resistance. So there's actually, we talk about this all the time when you're trying to decide whether you want to put on a trade or not. Talk about the old-fashioned scale, right? So very, very few times that you can have every factor on one side of the scale, bullish side, bearish side, right? So right now the bullish was the volume setup, algo guys in my favor, bearish, red lug, market profile composite high, extreme standard deviation. So you see how this is not, especially into the red lug. The red lug, they're so powerful. I just usually wait for new lugs. I'm going to give this a second, but if this starts to fail, I'm going to get out of this trade. And I'm just going to wait because if this is truly bullish, right? I know there was a bullish setup and I know that in the back of my head down here. But if this is truly bullish, this will bust through, this will form new Ludwig levels, and this will break out of this. Then I'm fine taking longs. Right here is not a good place. And you can see how it's struggling here. So let's just watch this. If this starts to fail, what I'll do is I'll just scratch this trade. And this is my fault for not knowing exactly where we were with the lugs. But guys, this is all from experience, right? I've learned the hard way of taking trades into major Ludwig levels. Is it possible this thing just starts to, say, comes toss me out and then rips? Yeah, then that's fine. Trust me, there will be more setups to get in to go long again, right? These happen pretty frequently. Granted, you don't want to see threshold-wise. You want to see my threshold for NASDAQ is 150, meaning I will draw my zones and play those areas if it's over 150 or more. But you want to see, between 3 to 5 in a day. If you're seeing 150 every 3 minutes, well, you need to up your thresholds for the day. I get that question all the time from my SI indicator course where, guys were trading back, when I first made the course, I had the threshold for NASDAQ like 100 and I would get emails. Well, I saw 100 happen. It just kept happening. And I kept taking trades and I kept losing or getting stopped out. Well, you just answered your own question, right? If you're seeing the threshold hit nonstop, that is a day, just like how volatility changes, that's a day where you have to increase your threshold size for the day, right? So 150 is fine for right now, but the point is you should be only seeing 3 to 5 in a day. If you're seeing 5 in a 20-minute period, you need to increase your threshold for the day, put it that way. And you just look at, you got to just watch the spikes. You can see this is by far the biggest spike of the day, so I'm still okay with the 150. But if I keep seeing 300, well, then I'm gonna increase my threshold size. All right, so you see, this is what I was expecting. I'm lucky that I'm not going to take a loss on this trade is the bottom line, right? Because I should not have bought into the red lug to begin with, like I just talked about. So it looks like I'm going to stop out of this trade as break even and then wait for something new. Um, any questions on any of that, Bruce, before I jump to crude?
Yeah, let's see here. Alejandro is asking about maybe you can show your sweeps settings. I'm kind of going back and forth here with him in the chat. Uh, so how you have it set up, yeah. So you don't have it on automatic mode, but Alejandro, I mean, you'll have to play around with it to find out what works. Here's Scott's for NASDAQ.
Right, so in sweeps for some reason, I have no explanation for it, right? So you would think the sweeps would be just as far as volume wise, effective as the SI indicator setup thresholds, right? So my threshold for stops, and I also just talked about this, and is 150 in Nasdaq. Well, you would think 150 sweeps would be as where you can kind of play that area as well as it's tradable, but from what I've seen with the sweeps, they're not effective until you're getting at least two times, and I would probably lean more to three to four times if you're going to play the sweeps as a as an area to trade, right? So, meaning you want to see at least 300, double the threshold, which this was probably three or four times. When you start seeing like 600-700 sweeps, you could definitely play that area like an SI indicator zone, right? But that's why I have this set for 300 because I want to see. I just want to see. I don't want to see every sweep in the order book. Just like I don't want to play every spike in the SI indicator, right? Like I don't play every spike. I play if it hits a certain threshold and above. Same with sweeps. You want to get your sweeps at least double the normal threshold for your SI. So my threshold's 150. I would set this for at least 300, and then you probably don't want to be playing them unless they're three or four times normal, right? So like this one right here was, what's this? This is another 300 sweeps here. You'll see them a lot, and they're just not as effective as these SI indicators.
152 contracts.
All right, so I stopped out of that long. I just scratched it, and I'm fine. If this turns around and rips, I'm fine with it. Guys, this is all from years of experience of trading, the Ludwig levels. So again, quickly, this is ludwiglevels.com. You can go to our website. There's a free 3-day trial. Say you saw it on the Bookmap webinar and you get special pricing. But, just the basic sense. It doesn't divulge her secret sauce, right? It's a proprietary. But again, anything that I have ever used, I want to know what it is, why it works, right? These I've just learned over, I tell the story all the time. There was a trader. It took me a while to incorporate these, but I had a trader that kept bragging about them that I was mentoring, and he was in the trade room, and he just kept saying how incredible they were. And I started watching him, and the guy made like, $1.5 million. He was trading micros, and then all of a sudden he makes like over $1 million, and it was just basically based on Bookmap SI indicator setups and the Ludwig levels. I'm like, all right, I'll start watching them. Then I started watching them, and they are absolutely incredible. Again, there's a Bookmap webinar. A webinar I did with her, just her and I, which she explains a little bit about them. And you can find that. I know it's in this room. If you scroll up, if not, email me. I can give you a link to that. The point is, I don't need to know the components of these. She's obviously using something with pivot points and market profile. And again, I don't know the exact ingredients, but I don't need to know them. I just need to know what is support, what is resistance, what is support, and then how the market reacts when you draw new ones, or if they fail, or if they pop above and they can't hold above, get below. There's different ways to trade these as far as thesis aspects, but just very simple: resistance, support. And I don't take trades unless I see heavy relative volume into the lugs. And this is what I was talking about, unless I see the big money coming in. So you can see here, this is another factor. I know it seems like I use a lot of my trading. I really don't. It's all pretty simplistic. So this is relative volume. This is showing me these exact 5-minute time periods for the last 30 days. So I know, hey, is this a lot of volume coming in the market, versus the last 30 days? And you can make it whatever you want. You can make it the last 60 days, the last week, whatever. 30 days for me is the sweet spot. So yeah, this was decent volume, this volume right now going into the lug, but I want to see. So you'll see it it'll flash yellow. I'm sure there's some in crude and stuff here, right? So it's like if it gets above 2-to-1, then it's yellow. Like you can see, and this is really interesting in crude too. We're gonna go over crude because I think this is gonna get smoked. You can see here So there was big buying here, right? And obviously the buyers were aggressive. Well, someone's on the other side of these trades, right? So the volume overnight or early this morning was elevated, right? And the buyers were so aggressive, and they got their way. But somebody was selling these responsively, meaning passively. There has to be, right? Because the buyers were being aggressive, and you see the volume spiking. So the point is, you can draw these areas just like you do the SI indicator zones, and be like, okay, I'm keeping an eye on this. Here's the retest. Oh wait, so now if this fails, this area fails, where all this volume came in overnight, you're probably going to get some huge stop runs and a huge move lower. And I'm already expecting that based on what happened this morning. We'll go over that, like I said. But this is real close to bye bye, right? All these buyers that were all aggressive this morning thought they had it, and now they're like, yeah, no, bye. Right. So that's what I'm thinking is going to happen here. And we'll go over the other reasons. But the bottom line is you want to be paying attention to the relative volume. So going back to the Ludwig levels, I will not buy or sell into the major lugs unless there's high relative volume coming in, and this is not high relative volume. It's normal, right? So does it mean it can't bust through? No, it could, and if it does, like I said, I'm fine with it. But there's too many things going against this trade right now on the short side for me to be taking longs right here, like we just talked about. Red lug, extreme standard deviation, market profile composite. Now, if this busts out of here, this busts through here, we get new lugs, then I'll take longs, right? But until then, I'm gonna just sit back and wait. Were there any other questions besides the sweeps? I kind of went on a tangent there as usual.
Yeah. There. Well, I have a question for you too. I or have you played around, or do you want to demo anything on the Trader Map Pro that you have found useful? If not, no big deal.
Yeah, we can. Once we go over these other markets, if it's dead like it's been, we can go over it. I have not been able to even play with it. I was out of town last Friday and Monday, so I haven't really had a chance to really dive into it yet. I mean, it's obviously I have it, but I have
Okay.
not had a chance. But we can get into it, especially if these markets are dead, which it looks like it's going to be.
I mean, it's just been, I have found it just unbelievable. I mean, when you said I was doing a filter for 10 lots, and then you said, well, what about 100? And I go, okay, let's try 100. And
Right.
it's just like magnetic.
Yeah. So we'll
It's
look at that.
cool. It's cool. No,
So
you don't.
all I can tell this
I'll wait. We'll
all I
wait
can
till you
tell
play
this
around with it. But um,
No, we can go over because then I can learn about it a little more too. But the point is, what I'm trying to tell the studio audience is, if Bruce is excited about something and says it's incredible, you want to pay attention, right? So I tell the story all the time. When I first started with Bookmap, when I got Bookmap, they reached out to me, asked if I want to do some webinars. I was trading stocks, and he kept telling me about this SI indicator that you have now, and he kept saying the CME has released this new data, and our developers know how to read it and understand like icebergs and stop runs. You've got to see this. You've got to see this. And literally, it was probably 3 months before I looked at it, and he couldn't have been more excited. And I have not heard him more excited about an indicator since that. And we know how powerful that this is, the driver of my trading, the basis of my trading. So my point is, if you hear Bruce giddy about something, you probably want to check it out. So we will look at that. Again, these markets don't look like much is going on. I do want to cover crude here because the setup did happen, and I want to find a way to get short this market. I'm kind of late to the party, but I'm going to go over what I did see. I thought there was a big stop running. Yeah, see, I already missed this trade, it looks like, but let's see. All right, so this is how we want to draw our zones. Here's your spike. Stops are a little different, and we covered this in a prior webinar, Bookmap webinar. So what you need to understand is stop runs obviously are just, they're not always pukes, but the majority of the time they're pukes, right? So meaning you're long, you put in, you can't monitor the market tick by tick. You put a resting sell stop in.
Stop sell CL
Hold on.
167 contracts.
My usual leading orders in the order book. Hold on a second. What are you doing, man? You should ask my room. I do this because I've got so much going on. I'll put it's kind of like this, like a stop order type of thing. I'll put it in the order book and I'll completely forget about it, and then I'll pull my screen up and be down huge. But anyway, all right, I caught that, I think. Hold on, let me see if I did it here too. So I'm human too. I make mistakes nonstop. So anyway, with stop runs, what you need to understand is there's like a first right to orders, right? So say you're long and then you put your stop at 72.90, right? Say you're long 100 and you put your stop at 72.90, sell stop, right? So it's resting in there. Well, somebody comes in and they need to sell 300 and they just literally drag and drop from. So they'll look at the order book. They'll say, okay, well, there's about 300 of the next 12 prices, so I'm going to just drag and drop my sell order into the book, aka sweep, right? So this is a sweep. These are what these dots are. So this person needs to get filled, will get filled before the stops are allowed to fire off. So you see what I'm saying? That this person that sweeps the order book for 300, whether however he's trading it, he's sweeping the order book. He gets first right to these prices, then the stops fire off. So the point is, yes, you can see the stop run on chart, SI on chart that started here at 72.90. Well, these stops could have been up here, but they didn't trigger until here.
Stops LCL. 141 contracts.
I'm so mad. I just missed this. I knew this crew was going to get killed. These won't fire off till this person gets his orders, right? So the point is, when you draw your stop zones, try to incorporate where the sweep started. So you can see this sweep started pretty much here. And not right on the red line. I know that's probably going to be confusing for a lot of people because people can't draw the zones for some reason. But I'm going to start it there because you don't know. These stops could have been up here, but they just didn't fire off till down here because this person gets first right? So this is what's so great about the sweeps indicator with the Global Plus, right? You can see this and it just helps you be more accurate in your zones. So that came down to there, and it doesn't even matter because something new had just happened, so I'm going to have to draw that. I just missed this trade. I would have been aggressive on this trade. So we'll just look and see what I missed. I would have been in an ATR below here. ATR was like 30 something. I would have been in right around here. And now you had more sweeps here, stops. Right? So let's draw this one. 245. And then we'll have a good lesson on so many times the best trades are when something should happen and it doesn't, and then you're ready to fire the other way, right? You're expecting one thing and you're like, that shouldn't have happened. And then you just crush it the other way. And this was a perfect example. And I've been wanting to be short crew. I just missed this, like I said at the beginning of the webinar. And so this spike continued all the way to this price, right? Use your crosshair up here, bring that up, and then you can just take it to the bottom where this spike stopped, and you want to include all the prices. You can see that's not accurate for me, so I need to bring it up, right there. I think that's right. Yeah. So that's the most recent zone. Hold on one second, guys. Bruce, if you want to talk I'll be back in like 30 seconds.
All right. So there's a question on the volume profile, and we'll get to it. But Scott, basically, Steve is asking that. He's just bigger picture stuff. He's just looking at very simple ranges and where breakouts may happen and where they may move to. So it's along with the Ludwig levels, and then it all boils down to Bookmap and looking at the Stops and Icebergs setups here. So for those of you who aren't familiar with Scott's trading, basically what he's doing is there's a signal alert. It's not like it's not a signal as go long or go short. It's more like a signal of a big volume event has unfolded, like stop run or iceberg purchases, and then he's looking for the studying that to see what direction it might go in his bigger picture context. All right, Scott.
Okay, I'm back.
You're back.
Okay. All right, so this is the most current zone. Let's get this in here. I'm late to the party here, but as far as the sell-off, but again, do never, ever, ever say this market can't go any further, right? The market goes as far as it wants, and that's where traders blow out. Like, for instance, this day in ES, I don't mean to digress, but how many traders, and I'm sure there's some on here, got absolutely their head ripped off on this move on this day. This is another reason why I had a bearish thesis, right? Because this thing covered this whole thing, rejected this whole move. But anyway, this day was just insanity as far as this move up. I mean, how many traders, especially the more experience you have, the more you're like, okay, that's about enough. I'm going short here. Yeah, that can't go any further. Yeah, that can go any further, right? And the thing just rips, 200 points. So the point is the market could go further than you think. So don't ever think that, right? So, I think this is a pretty drastic move, and I probably missed this down move. And this is a very important zone. This is where this gapped up from last night. So I just knew based on this morning, and we'll go over it again, like I've been saying when I get to it, that this was going to recover this entire gap up from overnight. So if this breaks this zone right now, this thing could go down $5, right? So this was a major zone. We'll cover here in a second, and then this was the gap up where I draw my. This is why this zone's drawn right here. If this can break right here, there is nothing here. I mean, this could, as far as prior structure from a long time ago. So my point is, don't ever think the market can't go any further. Now, I will play that. I'll still play the short. I let the volume tell me, right? So, I have an idea and I have a thesis. Okay, yeah, this has gone pretty far. But first and foremost, like, if this doesn't turn into a bullish setup, then what determines a bullish setup for me? If it's able to push a full ATR out here, right? If this fails, then it's a bearish setup, and this is the driver of my trading. So as long as the setups keep showing me bearish, then I'm going to go short. This day, actually, the SI and the E-mini S&P, the SI indicator kept me out of getting my head ripped off because there was setup, and not one of them was bearish, meaning not one was able to push an ATR below the setup. So I avoided getting run over on the setups. Granted, a lot of the setups this day, you had to be aggressive. We've already talked about in this webinar, being aggressive versus conservative, meaning waiting for the ATR retest, right? A lot of these were just, you'd had to be aggressive, which was, unless you love the area, that's hard for me to do unless I really love an area. So I missed a lot of this trade as well. But the point is, I didn't lose because these setups weren't none of them were bearish. So this setup right here, if this continues lower, I'm gonna go short it, even though it's gone too far. I'm doing air quotes again. The volume, the current volume is telling me that this is going to head lower. So I'll take the trade on the short side. Granted, this is a new important zone where I do expect some kind of a bounce, but if it doesn't, I'm going to short it. But my point is, I'm going to wait for retest failure on this specific setup because this is an area where this market could bounce, right? So meaning I'm going to need to see the ATR, I'm going to need to see the retest, I'm going to need to see the failure. Is there a chance this just goes like this and then sells off another 100, 200 ticks? Absolutely. And that I'm willing to take that risk because of where we're at on the chart, right? So I'll still short this even though this has gone down quite a bit, but I need to see ATR retest failure. So let's just put these values in quickly and then you'll know the prices that I'm going to be getting in at. So the top of the zone is 72.23. The bottom is 72.06. Where's my chart here? Then we'll look at the Ludwig levels, make sure I'm not going to be selling into a red lug. And you can see this is really struggling, this NASDAQ trade. I don't want to go on a tangent here, but here we are. We're at the blue lug. But so this is another reason that I'd want to see ATR retest. Like I just said, I'm not going to go aggressive. The setup's right here, right? Well, I'm not going aggressive into this blue lug. What was probably going to happen is when this does get an ATR, if it does get an ATR away from this current setup that we were just looking at, then this is going to draw new lugs, and I'm fine with shorting it, but I'm not shorting into major lugs, right? We've already covered that. So, and the other thing I want to see, if I were to consider shorting into a lug, I need to see high relative volume. This actually isn't bad, but that was the bar before. I want to see it into the lug. I want to see this thing spiking over 2-to-1 normal volume. And that's not happening as of right now. So I'm going to wait for a retest for this particular trade. So back to my zone. 72.23, 72.06. Put that in. Again, remember, if you remember my trade room, you get this access to this spreadsheet. We're doing two different types of trades. Reversion trade. Prices are 72.23. And then a position trade. The position trade you guys have always seen. We're doing a reversion trade, so that you literally just plug the values in and go. So 72.06. That's the zone, top and bottom, right? Then I go to my ATR, 5-minute ATR. You can see in the middle of that chart, right here, 0.37, which just means 37 ticks. You enter it exactly like you see it. This tells me what the ATR would be. So you can just use this revert invalidation price. You can just use that to determine the ATR to figure out. So meaning for me to go short, I need to see this thing touch 71.69, retest fail, and then I would short at 71.65, which is 110% of an ATR, right? So visually, what I would need to see is 71.69. Then I need to see it retest this zone. Then I need to see failure. Then 110% of an ATR, which is 71.64. That is where I will go short, right? Then it tells me my exact size I should be putting on based on my account size. So I could put on 3CL. I'm risking 100 ticks. It doesn't. I don't care what it is. If this okay, here's a perfect example, right? It doesn't matter. It doesn't matter if I'm risking 200 ticks. I just change my size based on what I'm willing to lose based on my account size and percentage, right? So let's change this. Say the ATR is 70. It can be. Now, does that matter? I'm risking 174 ticks. Do I change anything? No, I just trade less. Now I could put on 1.72 or 17 micros or 2 contracts. See the difference here? So see the non-difference, I should say. Let's see what that's 38 now. The point is, it doesn't matter what you're risking. It matters how much you're risking and based on the current volatility. Do not have static stops for your trades. I'm telling you, or entries for that matter, right? It's just, if you really think about it, you'll come to the conclusion that it's just nonsensical and you need to adjust the volatility, not on how much you want to risk on a trade. Yeah, you can get away with it for a while, but if you do it over a long period of time, it's not gonna be a profitable situation for you, because the market, when the volatility is going crazy and you only like to risk 10 ticks in crude, you're just opening yourself up for that. All right, so let's see if this gets to an ATR. There's another swipe here. So this was a stop run. It was 100. Just so you can see, it was 200 swipes. 100 of them were stops, right? So obviously, whoever swept this order book triggered these stops. That's not threshold. So for me, I need to see 150 in crude. Bruce, why does this pop up like this? Any idea? It's unavailable for this instrument? No, it went away. All right. I'll get it sometimes. It just stays on my screen for like the entire day. All right, so I need to see 71.69. Still has not gotten any ATR. So once again, I'm waiting for this, and this. So if I do go short, what I was getting at, my stop is going to be at. If I'm short, then I'll stop out at 72.68. And I already know what I'm risking, how much I'll lose if I risk, or if I take the trade. And then you just put it on and you wait. And then what I do is I get out at important areas. I'll piece out at important areas, right? So, and then let's just look at some important areas here. So I'm pretty much assuming once this goes an ATR below that zone, right? So our zone's here. This gets an ATR, we're most likely going to draw new lugs, right? So I'll piece out at important, like the yellow lug, other important areas. Say there's just nothing here because we haven't been this low for years. Probably not. I don't remember the exact time period, but it's been a while. So I'll get out of, lugs, baby lugs. These are baby lugs. If they're confluent with something else like VWAP or something. But my point is I'll hold the core position until we get to a major lug. So say we draw new lugs and the blue's down here. Well, I'll hold it until we get here and or an opposing setup. So if we start motoring down and then a new setup comes in that turns bullish, meaning it can get an ATR above that setup, well, then I get out of the entire trade and then I reassess and that possibly will go long then, right? So this is just adapting to the real-time volume that's coming in, right? So now you just sit and wait. You can see they're swiping them back and forth here. What do I have my swipes on set for this? Let's see here. Sweeps, I should say. See, I only have this at 200. I should have it at 300. You want at least double. You just get too many of them, right? So that clears it up a little bit. So just from that aspect alone, you had sell sweeps sell sweeps. Important to know, right? So you want to see how the market reacts to this area. So if you are the buyer here that got swept, this market moves this far against you. As it comes back, you're like, oh, thank God, get me out, and then you cause the next wave down as these guys go to market to get that all out of their longs, right? That's the whole theory behind it, and it's not a theory; it's what's happening. Again, all of my setups are based on my personal experience of being a large trader at one point, where I was trading thousands of contracts. Right, I used to average 50,000 contracts a day, round turns a day, in the E-mini S&P. That's when it was only trading 500,000 a day. So I was 10% of the volume every day, right? So I know how I used to react when I was caught. Back then, you can see counterparty, you can see other traders and other firms and the orders and who you took the orders from, so on and so forth. So it was a big poker game, but I can see how they would react, right? So all the setups that I use, the volume setups, the SI indicator setups, are based on personal experience of trading. It's not hypothetical stuff with a lot of, again, I'm doing air quotes, educators out there that don't really even have real world experience. A lot of it's hypothetical. This is what is going on in these markets, and I know it's very simplistic, but trust me, at its core, trading is very simplistic. If you can understand the psychological aspect, and if you can understand how traders react when they are loaded up, and the areas, that's why we call them volume events. They're areas where traders are loaded up. If you can understand how the market should react at these areas, that's the edge. That is my edge. And then when you apply these areas to anything that you deem important, right? You may not have Ludwig levels. You may not use market profile. You may use moving average crosses or moving averages or Bollinger Bands or whatever. It doesn't matter. What you want to see is the volume, real-time volume occurring at those areas to have a better judgment, right? And it goes through anything. Anything that you're using fails some of the time, right? Well, I can promise you, if you start to understand these volume setups, you're going to understand why it fails. To me, just saying, "Oh, that's trading. It's just a probability game." Yes, that's true, and you need to have that mindset. But I still want to know, if you're just using like a Bollinger Man, and one time it rips through it, and you don't know why. I want to know why it doesn't work, right? And many, many, many times you're going to be able to answer the question on why your setup or your area that you wanted to trade didn't work when you understand what's happening in the real-time volume, because this is what drives markets, not price, not Bollinger Bands, not anything else. It's the real-time volume at those areas, when they work, when they don't work, right? So if you can understand this is the edge. And again, if you have something that works great, well, it's going to work even better when you can apply this real-time volume into those areas. All right, so this is just chopping around. I wanted to see 60. What did I say? And you got to keep an eye on your ATR too. I think it's probably the same, but let's see. It's up to 39. So let's change this. Speed to go short this. See 63, then a retest failure. I'm sorry, 67. Then I see retest failure, and I'll short at 63. So this is just bouncing around. So let's go check out NASDAQ. See if I'm going to be mad for not taking that long. No, doing nothing. So if you guys watch that webinar I did with her, again, it's in this room. I've shared it many times. So there's other traders in this room. If not, email me. But one of the things she talks about, one of her favorite setups with her own levels, is when the market pushes above a major level, it does not have the criteria to draw new ones, right? So you can see here. Let's look at some examples when you drew some new ones. When I drew some new ones, it's been a while. And the longer you see these that it has not drawn new ones, the more powerful the move is when they break. So keep that in mind as well. But you can see, let's see. Yeah, so some new ones drawn here. I just want to see when it was. Oops. Do that. I want to do that. What am I doing? So anyway, when the market, if it doesn't have the components to draw new ones, when it gets back below, that's usually a great signal for it's off. So keeping that in mind, right? So we're always trying to come up with a thesis on what's happening in these markets. So if this starts to fail, we know, okay, hey, it popped above the red lug. It did not draw new ones. That's not bullish. Then we go back to our market structure, and then we say, okay, well, this market's breaking out. This is what we talked about this morning, right at the beginning of the webinar. This market's breaking out of this balance area. This should take off. The worst case scenario, it should come back to the top of this, then go last resort, high volume node, then go. If this does this throughout the rest of this day, right, it's probably not going to happen while we're on this webinar, but if this goes like this, and this gets to this high volume node, we already know what happened with the lugs, right? Something that should have happened that didn't. It didn't draw new lugs, and then this fails. That is a fail breakout. We already know this is still pretty bearish, intermediate term. This is most likely going to happen. Very likely to happen, right? So you're always ready to pivot. You have if-then scenarios. Right now, yes, this looks bullish. Why isn't it drawing new lugs? Well, it could. Then fine. I'm taking long setups. But if this fails, the bigger picture look, I know if this breaks through pretty much 11,500, bye-bye. So this is a trade that I would take. So say we get a setup right at the end of the day today, and it's bearish. This is something I would hold overnight, where you can wake up tomorrow and it's going to be 300 to 400 points lower. None of this has happened yet. I'm giving you if-then scenarios. So this is what I was getting at with crude earlier, why I expected this sell-off. Right, so this gapped up overnight. Right. So this zone was really, really important. We'll look at that in a second. But we gapped up overnight, and this was looking like it was going to possibly come. This was a balance area here, multi-week balance area, right? Well, like I said, many times when markets break down from balance, they'll come back to the bottom, then they'll fail, or if they get through that, then they'll head to the high volume node, and then they could still fail.
And Stock sell CL 427 contracts.
Yeah, that's all. I'm so mad I missed this trade. The last few webinars, all I've been doing is complaining that I'm missing trades. But anyway, you can see we're through this zone now. We'll come back to this bigger picture view in a second. We have a new setup. So this whole analysis I did based on this zone is all done because we have a new volume event, right? So now we got to do it all over again. And I'm pretty sure we'll have new lugs here, and I could possibly short this aggressively now. So let's see. This zone. So here's where the stop run started, but you can see the swipe started. You don't want to see blue because that means that it wasn't the actual sweep that triggered the stop run. It probably stopped. See how this popped up here? This swipe is probably what started this stop run, right? So I put it a little bit above where the red line started because again, we already covered this. This sweep triggered the stop run. So I want to incorporate the sweep prices that's triggered the stop run because the stop run could have been up here, but this sweep gets first right to the orders. I hope that makes sense. It's probably confusing to some, but I just want to make these zones as accurate as possible. So that's your new zone, 71.82, 71.66. Let's just quickly put this one in, and I may go short aggressively here. 71.66. TR is still 39. All right, so if I want to short aggressively, all right, we get in at 71.23. I risk up to 72.25, and I can put on 3 contracts. So what are those prices? They're just it's 110% of a 5-minute ATR outside of the volume event, right? So that would be entering here. Bubbles back here. So ATR is 39, right? So 110% of that is like 42 ticks-ish. So that's where I would get in aggressively, or you can wait for that. I will get in aggressively if we have new lugs. So let's check out our lugs. If not, I'm going to wait like I was waiting for that last setup. Stocks are doing absolutely nothing. There you go. There's your new lugs. So now I'm not afraid to short aggressively. So remember this last setup, I was cautious. Now, here's your new lugs. I'm fine with shorting this. Let's check out our volume. I'm sure this relative volume is spiking. Not sure, but that's not.
And stock sell CL 385 contracts.
So there's another stop run. You can see this is all spiking. You see this relative volume. There's another stop run. So now I got to do it over again. You know, you usually don't have setup after setup after setup after setup, or one right after another. But so let's just go back to this original zone, right? If I were going to get in aggressively, I would have been in at 69. Remember, that was the price we were talking about. Well, now what you can do is trail your stop based on the new setups and then actually add to this trade, right? I just didn't get in aggressively because of the lug, but I was, you know, if I would have gotten in aggressively, I could have been trailing my stop based on these new setups. So again, this is kind of a rare, it's not rare, but it doesn't happen that often where you just get setup after setup, but it is what it is, right? So I'm just going to delete this and I'm going to draw the newest setup because it's basically on top of each other. So, I know I'm missing the move here, but it is what it is. Like I needed to see, I just watched so many of these setups at the lugs, like I just wasn't willing to go aggressive there. If you thought there was enough to go aggressive, well then you're in this trade and you can just trail your stop based on the new setups, right? So this is the newest one, 71.66 all the way down to 39. I'm just mad that I didn't short this earlier. I had a chance and then I got sidetracked way at the high, and I keep telling you we're going to go over it, and we will, but I just haven't had a chance. 71.66 down to 71.37. Any questions, Bruce, on any of that? What am I doing here? 71.66, 71.37.
No, we're good here on questions.
Here's still at 39. All right, so now my prices are, barring another setup coming in, which may happen, 70.94, and I stop out 72.09. So I just wasn't willing to short into that lug, or else I should have already been short this from up here, but it is what it is. So now I have a decision to make. Do I want to chase this down or wait for a retest failure? I'll still go short this market, but the point is, do I want to go in aggressive or do I want to wait for that? I'll just wait for that because, again, this has come down so much. I'm assuming we'll at least that doesn't mean the selling is done by any means, but I'm assuming my odds are pretty good that we get one of these, and then that's kind of just confirmation that I'm okay to short still. But I mean, there are other things you want to pay attention to. We talk about this all the time. Is this extreme standard deviation of VWAP, right? So this is turning into a hugger. We call it a hugger, and you get huggers. So here's VWAP, daily value, right? So this is one standard deviation, 1.5. We're at 2.5-ish, right? So you'll get huggers when the relative volume is really high, because it's like this self-perpetuating cycle where you get these algos that play the reversal, that they just kept getting run over by the big money, and then they turn around and puke. Then they buy it again, turn around and puke. Those are the days you get the huggers, and you only usually see the huggers is when the relative volume is high, like it is, like we've just shown, right? It's elevated right now. You see these bars, right? All these bars, that's at least 2 times normal volume, and that's why these algos are getting run over, right? So my point is, unless you're seeing that volume, that kind of relative volume coming in at these extreme standard deviations, you want to be very careful of shorting, because these algos usually will win, right? So as soon as this big money's done and this puking's done, you can bet you're going to get some kind of snapback, and I just want to be careful of being aggressive with the shorts is what I'm saying, right? So I'm going to just wait for ATR retest on this, just because I'm still wary of buying this deep into the standard deviation of VWAP, right? So I'll still short it, but I need to see this, and this, and this. And I want to make sure it doesn't do this and then that, right? So we'll just keep an eye on it. Again, I missed this entire thing from up here. So what I was getting at this morning, so I was watching this. This is when we were up here. So this gapped up and we were up in this area. So first of all, we're in the zone. I'll just show the zone, how important the zone is overall. This is a weekly chart, mind you, right? So this is going back. I don't know why this does this every time. So let's go back 10 years. All right, so you can see how important the zone was over many years. All right, so this was actually 3 years ago here. Let's see how far this goes back. So how relevant this was. Yeah. So you can see here, this is going back 7 years. So there's, mind you, this is a weekly chart too, right? So you had some balance here, directional conviction, huge move down, came back, held. Directional conviction. These are like $10 moves, just these little blips here. And then this was the move that eventually led to that minus 38, whatever it was, that guys got killed, where it went inverted. But anyway, the point is, this is a very, very, very important zone. And when it finally held above it, then it took off. So you can see this was like the last balance. Remember, this is weekly. This is all fractal, by the way. It doesn't matter if you're looking at 5 minutes or weekly. Yes, the bigger the time frame, the more powerful these balance areas are, so on and so forth. But you can see this finally broke out of here and then led to that, and then it bounced the other day, and now we're through it. So anyway, this was a major zone, is my point. And now we're through it to the downside. Let's get this back to hourly. So anyway, this morning we popped back. So yesterday we got below this zone, right? And then this morning we gapped back into it. So we were actually, if I remember correctly, we were a little above this, and I'm like, okay, well, this could be bullish. This could head back up to this high volume node of this guy, right? Or these zones here. So I was saying, okay, and there was a long or a setup. There was a stop run. I'll show you. And algo guy was this was before the open, right before the open. Algo guy was bullish, right? And we were just pulling back and like, okay, well, this should hold and this should do this. Well, then we had a setup. And what keyed it for me is we're doing this reversion trade in my room. And so many times these markets will revert back to the volume event. So this was the area this morning, right? So I was watching this. I actually took this trade and I lost on it for a reversion trade. And I was like, everything was pointing bullish, right? And we had the gap up at everything we just talked about. And I'm like, okay, well, this should be coming back to the zone. And it kind of just a hot knife through butter. It was like 100, 150 ticks. There was no setups besides this one. This was a Dumb and Dumber. So if I wanted to be aggressive here, this was the place to short it. But this was a stop run that was not real buying that failed. This is one of my 6 setups on my course. Dumb and Dumber, right? So anyway, I was waiting for a retest and it didn't. Everything was looking bullish, and I'm like, what is going on here? And I'm like, this thing just drifts down 150 ticks. I'm like, this is going to get killed today. And then this is where I screwed up, not putting on the trade on this setup here. So you can see this was then a stop and hold, right? This is where I should have been aggressive to get in this trade from basically this price. This is not so much because again, I thought it was looking bullish at the time. But once that failed, so what I'm getting at here is so many times when something you think should happen doesn't happen, that is a go time for the other way. So I'm thinking bullish. Okay, we're gonna have an update today, and then this happened. I'm like, what is going on? Like usually we'll retest the zone, gets crushed, then that comes in, and that's bearish. So this is a stop and hold where you get the stop run and the big money holds in and keeps pushing it down. I'm like, this thing's gonna get smoked, right? Because I was expecting one thing. Something else happened, and then this will key you to get short to catch this big move, right? And I didn't, of course, because I missed it. But my point is, when you're analyzing markets, when you think something should happen and it does not, it's not that you fight it. You're like, okay, that was wrong. You may even taken a loss, right? I took a loss on the reversion trade. It's like, okay, well, that's just information. Now I'm going to kill it going the other way, and you can see it led to this huge move. So I saw it, but I just had so much going on today. I did not catch that stop and hold that we're talking about, and then it's just been straight down since then. So, but what you need to know now is just we're back through that important zone. I lost my chart. All right, so this is bearish. Like this is not going to be pretty for crude, which is good for our gas prices, I guess. But so these were zones drawn from a long time ago. Obviously, there was nothing here. Our side have zones, so I could totally see this today and then tomorrow heading down to these zones, all based on what should have happened, didn't. And like I said, overall, this is the bigger picture. This is all stuff you want to know, especially if you're trading longer term. You had that whopper, right? Multi-week, and you had this guy, right? And you had little dudes. Bye-bye. So imagine if you're a big fund or something now, and that's the other thing too. Spuck Ammo was talking about. He was talking about crude or energy. He said funds are liquidating, right? So the point is, yeah, if you're this fund that was long in this area, hell yeah, you're liquidating, right? And now you're like, oh crap, this isn't going up. I got to get out for my clients, so on and so forth. So you don't need to know any of that. You're never going to know what's going on as far as what our funds are doing, but you do know that these are traders placing bets, and when they're wrong, it leads to huge moves, away from that area. And that's basically what we're doing with the SI indicator setups. All right, so it's pretty dead. I'm trying to go over how I look at markets, but even if you don't, all that stuff is it takes experience, and you learn how to read market structure, so on and so forth. Even if you're not at that point in your career, you 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 can trade and be profitable just trading, understanding how the markets react to these volume events, right? The better you get at understanding the bigger picture, the better you're going to get with these volume events, especially to catch monster moves. But if you're a day trader and you're just learning, you don't need to understand bigger picture context for day trading. So I mean, you definitely want to know it, but my point is, you can trade these. If you know how the markets react to these areas, you can trade them if you have rules, playbooks based on what you're looking at. And that's what I try to show when I get in these webinars, as far as ATR and the areas and what I expect to see, so on and so forth. So the important thing here with the NASDAQ, before we get into the heat map, we have about 15 minutes to do it, is look what's happening here. This is why I scratched this trade, right? For the tools I use, this was telling me, okay, this said there's so much confluence up here that this may not go, right? So what is important here? Well, it tried to get out of here, didn't happen. Tried to break the lug, didn't happen. We had a bullish volume event. So not that I'm going to trade short off of this particular event, because I don't trade, I won't trade the short side if this gets a full ATR above this volume event. But I know all of this stuff happened, kind of like the crude, right? So I know what should have happened. Guess what? That did not happen. You can bet your bottom dollar, if this breaks this area and you start getting setups, I'm going to enter aggressively short, like I should have done with the crude trade, because of what didn't happen. See what I'm saying? So you understanding, hey, this is a bullish event. This thing should rip. Hey, it didn't rip. Hey, it held all those areas. Doesn't mean you're trading off this particular event, but guess what? This gets below here. We start getting events. This thing's going to get killed, is my call, right? So it hasn't happened yet. Doesn't mean you're just short right here. I'm not doing anything yet. But I'm telling you, you watch the rest of the today. If this gets below here and we start getting a volume events and the market's able to push ATR below these volume events, you're going to get a monster move lower. All right, so let's, again, there's nothing going on to even really trade besides crude. Let's just take one look. It's just bouncing on this. I'll keep an eye on this, but I will trade this with the ATR retest like we've been talking about. But let's go over the heat map stuff. Or not heat map.
Yeah, Trader Map Pro.
Trader Map Pro. All right, so what do I do again? So I got to make a copy of this, correct?
Well, no, just go up to the toolbar there. That's whatever instrument you want to get a filter for. So start with that.
Let's do this.
Okay, so then click on that. That fourth button there on the toolbar. Yeah, there.
This?
Yeah. Okay, and then Trader Map Pro. Click on that. Okay. And then let's see. Hit create. All right, and then scroll down a little bit. That feedback thing. Just say, just leave it for now.
Don't make it feedback.
We want your feedback though. But anyway,
you'll get it.
We got it. We got it. Yeah. So now see, like it created a new instance here, and you can see the symbol name. You can give it your own name as well. It's also down below. And that's the new, that area there. So you can give it a name in there and hit apply. Whatever you want.
Why didn't this one in parentheses? Why didn't that carry down here?
It will, I believe, the instrument and then the new. So anyway, click on
Let's
add.
just do this. Let's see what happens when I do this.
Yeah, I don't think it'll work. Because it's for creating just a new one. Give the name. No. Go down below, and then give a name in there in the copy name area. Yeah.
Okay.
So that's where you put it. Okay. And then hit apply. Okay, and then hit add. Okay. Now this is where you're going to add your filter. There's going to be multiple filters that you're going to be able to add in here. Right now there's just 3, but let's go with order size filter, MBO. And then from in here, input the number of orders you want to filter for. So between what and what. So if
I'm
you
going to go
want,
20. You think, for some reason, you think 10 is a lot? It's not. So
okay,
we'll go 25 to 100. How about that?
yeah, or put leave 1,000 in there.
All right.
Might as well. And then now hit subscribe. Okay, and then you can close this. And then you have to go to the new toolbar, or it popped out a new image chart in a tab.
I'm getting all of these weird. TraderMan Pro has lost connection to MBO. I'm getting like
Yeah.
500.
So just at the bottom
Oh,
of
because the MBO is not accurate
MBO
on
is not
that.
included in it. Yeah. So at the very bottom, see the X, see the X at the very bottom. Yeah, click on that.
Got it.
You know, okay. So you need to update. You need to update to a newer version.
I thought it was supposed to automatically update.
Yeah. I mean,
Wow,
it's
it's really annoying.
yeah.
Just my feedback.
It's really
This is
annoying.
very annoying.
Well, yeah. You'll need to update the stops and icebergs to a new version. And
It's the new version. I thought I was on the most recent version. 3.6.18.
yeah, there's one. Not sure. It should be. What am I using? Hold on.
I mean, it's good this is happening on the webinar so people know, hey, it's just not my. I mean, they're going to see not to freak out when this happens.
Or the best thing to do would be to just go to your just for this demo, go back to your original instrument ES, okay, and then click on the yeah, up there, studies configuration, and then deselect stops and icebergs on chart. Yeah, just on chart.
Sure.
Yeah.
Okay.
All right, and then now you should be able to go back to that other instrument. Okay, and then click there. All right,
Hey.
there.
All right.
So
Oh.
okay, so go back to the original one and click also deselect the on chart
Oh
or
no.
subchart.
You need the subchart?
Yeah.
That's not cool.
Oh, it'll come back for you.
All right.
So
You say so.
and then deselect that. Okay.
Why?
All right. Close this one. Close this. Sorry about this.
Am I closing?
Close that instrument. And then keep your regular ES open. But
I'm closing the copy.
close the copy. Yeah. No, up above the X button, or you can right click on it and nah.
I can't find the X button though.
It's to close that window.
I know, but it won't scroll over for me to find the X. So this is for the copper. I can't find the X. See what I'm saying?
It's on the other. You popped it out there. It looks like so. It's the one that has all the scrolling error messages there.
This is my normal. This is my regular. And then this, now I can't find it. So if I'm here, let's see. I don't see that anywhere now. I click on it, it's nowhere to be found.
Okay, so
Wait, here it is. All right.
Okay, so yeah, close it, and then in there, yeah, click on that, and now close it.
That wasn't happening before.
Yeah,
I couldn't get to this X, is what I was saying.
Right. Now unsubscribe. Okay.
Boy. All right.
Okay. So now let's do it again though, and go back to that ES. Go back to that ES.
Yeah.
Okay. And then now go to the studies configuration, TraderMap Pro, and now just hit subscribe again. It's all set to go. It retained it. Huh. Interesting. That shouldn't happen.
Again, at least it's good this happened on the webinar, so people aren't drilling support on what's going on. At leleast they're seeing this happens. And
I mean, I went through this process a few times, and you just, as long as it was updated, everything was fine. So okay, let's just stop and Yeah, forget it. Like that should do the trick because you're no longer getting that MBO data. However, it just continues to scroll here. I'll send this this exact moment to the developers in the webinar so they can see it.
All right, so I guess we won't be doing that today. Now I better get my, not that anything happened today, but it's better populate or you're in big trouble. Is this going to show me the past stuff? Yeah, okay.
Yeah.
Right.
Yeah. It's because you already opened your symbol in Rhythmic and you'd already started collecting data.
Right. Okay. All right. Well, so this is just yet another webinar that I have not put on a trade, but I did put on one trade,
Yeah,
and I
you did.
scratched it.
Yeah.
I put on one trade and I scratched it, and I had a reason. And
Well, you had that was interesting, Scott. I mean, you had multiple reasons. So the
and what I did is I just made a mistake because I did not. I should already know all of that before. And this is what you guys should be doing every morning, right? You need to be going over whatever you look at. You need to know for whatever market. Okay, we're here, we're here, we're here. I should have already known before I even put on that. And I actually did because I remember looking at it. That's why I said at the beginning. Remember, if you heard me, I said I think we're close to the red lug. I put the trade on first, which was stupid because I could have taken a loss in a hurry. But I didn't know. I knew we were here, but I didn't know it was extreme standard deviation. I didn't know this was the top of this profile. So all of this was telling me, yeah, the setup is bullish, but it's just not a good spot to go long. And if this is a market is truly bullish, like I said, then and this still could happen, right? This still can go here. This is just retesting this area. This can move up higher and build new lugs, and then I'm ready to go. And then I also know, hey, this original area held, right? But I'm just not. I wasn't willing to take it off of this setup because of all the Confluence bearish that was going on there. But if this does hold, this just guys, this is all stuff that you keep in mind. If this starts motoring up, just like I gave an example, if this starts motoring down from here, this starts motoring up, we get new lugs, and you get new volume setups. It's time to fire. Same this way. This does not hold. It should have ripped. It didn't. It should have held. It didn't. Then trust me, the setups that come in, you want to be aggressive on the bear side. Right now, we just sit and wait, and this is part of trading, right? It's sitting and waiting till you see what you want to see, and then you fire like a sniper. We liken it to being a sniper all the time, right? Where most traders get in trouble. Why most traders don't make it is because they're trying to catch every move that happens. And you're just not going to be profitable doing that. You cannot compete with these algos. Like I said before, I used to be a huge scalper. I used to be tick for tick, right? Printing money. Well, if I'm not doing that anymore, there's got to be a reason for it. I just didn't say, you know what, that's boring. I don't like making millions of dollars. I'm going to go to longer term trading, right? There's a reason because it's not possible. And I'm not saying you can't make money scalping, especially, I mean, when we finally start to look at this trader map, I think there's some huge opportunities that Bruce showed me before. But other than that, trying to scalp with these computers, with these algos, good luck, right? Trust me, I would love to scalp. I'd love to go tick for tick in here. You can't do it. These orders are fleeting. You can't lean on anything. If you're wrong, you can't get out. The thing's swipe. I mean, again, I would love if you can make money scalping consistently, and I'm talking more than, a week, a month. You show me your P&L for a year of scalping statements, so on and so forth. I will literally, I'll put up like a homage to you on my website because it's just not by hand. I'm talking clicking the mouse, not coming up with algos because that's the whole thing. If you can write your own programs, you can compete with these algos. But I don't need to do that. I don't want to, especially the older you get. Like, first of all, scalping is a young man's game, man. You got to be on top of every tick. And you got to be concentrating nonstop. You can't lose your concentration. The older you get, the more it's like, okay, I know these lead to big moves. I'm fine with putting them in and letting them work, right? But even if it was, still scalpable, like I said, I'm a little too old for that. But if it was, I would probably still try to do it because I made so much money doing it. But I keep telling you guys and girls, if I can't make money doing it, and I used to be one of the best at it, then you may want to say, hey, this is probably not the direction to go in my trading. I want to look more for the bigger volume events and trade for bigger moves off of those volume events, right? So Just my 2 cents. I think that's why you come on these webinars, to get my experience, both good and bad, right? It's not all sunshine and rainbows. You come in my trade room, I make mistakes and complain and go off the rails a lot. But that's a learning experience too. You can get on there and be like, wow, I don't want to be like him. I don't want to be negative Nelly like him, so on and so forth. So learn from my good and my bad. But the point is, learn from my experience in these markets so you don't have to go through that same experience as far as the negative side, right? That's why I do these webinars, to help you guys not have to go through 20 years of torment, learn the right way the first time, then you're not tortured and not blowing out different accounts, 10 different accounts in your life. That's my goal of these webinars for you guys, and to teach you how to use Bookmap, which is the most powerful thing I've ever seen. All right, on that note, nothing is going on. This zone is holding. So if we draw new lugs, I'm ready to fire on the long side. Other than that, there has not been one setup besides this first setup this morning and these stop runs in crude. This has never got an ATR below here yet, so I'm watching this. If this particular setup, let me just get rid of this. I mean, headache with all those yellow lines in here. Let's say this does hold for right now. Will I go long? Well, if this goes ATR retest, I'll possibly give this long a shot, because this is telling me, this is the real-time volume's telling me, hey, this is done selling off for right now. We could get a minor pop. Am I expecting some huge move up? No, based on everything that I said, but I'm a day trader. So I would possibly let that volume event tell me. I mean, I'm not loving it down here, but this could pop back into this zone, or maybe here, right? And then I'll get out. But I think the bigger picture is getting killed. But we already had, this thing has already moved 74, 75 down to, that's almost 400 tick down move, right? So I missed the party on that one. I still think we're going lower, but my point is, I let this dictate what I'm doing. So if this turns into a bullish setup, I will possibly go long here. Other than that, if there's any other questions, I'm happy to answer them. If not, I know you got your other guy ready to start here.
Yeah, no, I think we're all good. Yeah, thanks, Scott. If you like the video, please, or the webinar, please hit the like button, subscribe to the channel, so you get alerts, etc. Yeah, other than that, it looks like I made a mistake there. Juan was saying it was just a naming issue on that Trader Map Pro, and I wasn't paying attention to it. I've just had the MBO thing happen so many times. We'll do it again though, Scott. We don't have time for it now. We'll do it again
next
though.
week.
Yeah, I mean I believe it was fine. But I'll look
So
at the
quickly, in case I want to watch it, what did I do wrong? Or
well, try it again
what naming
quickly
issue?
here. So go back to it, and then now click on it, and then here, see you have the name Trader Map Pro. Put in 2 there. See, because your symbol,
Two?
yeah, just try that. Yeah, click apply on the name, yeah, and then subscribe. All right,
Okay.
and let's see if it happens again.
I'm only seeing 2 of them right now.
Okay, so then close them. Yeah. And there it is. Okay. Lost connection to MBO, Stops and Icebergs. Okay, undetectable. All right.
I do have it turned on again, so I don't know. Try one more time.
Oh, you had the Stops and Icebergs on again. That's right.
But I'm still seeing it on a different screen now. Yeah.
So try closing it now, yeah. Or the symbol. Try closing and reopening the symbol. The bad name is at the top. Huh. Okay. Yeah. So yeah, that's where it is. Yeah. So put in the 2 there. I'm sorry.
Is dash 2 okay?
No. Just take out the 2. No. Original instrument is the.
Original instrument.
Let's take a look at it again next time. I'll figure it out. I'm sure that it was it's something pretty simple here.
because it originally had looked like this.
Yeah, so leave it at that, and then put in as just type something in here. No, 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 don't do that. Put in like, just type in a string of other things.
About that.
Test or something. Yeah, that's fine.
I
Yeah, try that.
subscribe.
hmm
Nope. I could see it on another screen.
Okay, that's it. We'll figure it out. I think we should have this. We should have the MBO shown in here anyway, just to avoid this error. But yeah, we'll get to it.
Uh,
Delete the copy. Yeah. That and that's correct. I'm a little confused. You guys can see it clearer than I can right now. But yeah, delete that. We'll let's just get to it next time. We gotta go. We gotta go.
All right. Well, don't be sending a bunch of support messages, you guys, until they get to. I mean, this is brand new, so just bear with them. But
We
like I
fixed
said,
this already. It's this is my. I should know what's going on here. I'm sorry, guys. I'm just. I can't quite follow what it is right now. But we'll get to it, and I want to talk to the developers about just offering MBO in there anyway. That is unfiltered, so this will never be an issue anyway. So, all right, we'll try it again next time.
okay, cool.
Okay, all right. Well, thanks, Scott, and we'll see you next Thursday.
Yep, thank you. I appreciate it. Hopefully, we'll get trade one of these days again. But keep an eye on Nasdaq again. Whatever way this breaks from here is probably going to be the big move. So be ready, and obviously ES. If there hasn't been one signal in here today, but all right, I will see you guys next week.
Okay, all right. Thanks, Scott. Bye bye.
Thank you.